Hi, everyone. I've got with me Luca Dellanna, who I believe he'll tell us in a second is in Turin, Italy. I can tell you more about Turin. But I came across Luca, I'm not sure exactly how, but he solved a huge problem for me. And then I started tuning into him. And this is actually the first time I've met Luca in person. We've had some email exchanges and he was going to make it to Value X, but then couldn't. But I'm super excited to meet you, Luca. I'll just give you a little bit of background. I don't remember exactly how I came across Ole Peter's work on ergodicity, and it blew my mind. And then I started trying to explain it to friends. And even though I'm a big lover of mathematics, I can't claim to be a mathematician myself. And I certainly was unable to explain it to my friends who thought I'd jumped off the deep end. And actually, Luca, a year ago, I wanted to include a discussion of ergodicity in my annual report. And my good friend, William Green, looked at it and he said, "You've jumped off the deep end, Guy. I'm not going to do anything because you cannot, if you cannot explain it clearly to me, you can't explain it to anyone else." And then I came across other people who were mathematically more knowledgeable and who just said, this is trivial. So in any case, for those who don't know what ergodicity is, you don't even know what I'm talking about. But then I came across Luca Dellanna's book, which I believe has 0 equations in it. And it was able to explain ergodicity in a very, very simple way. And then I started using, Luca, the quotes from your book, and I wrote a review on it. And so I'm super excited to talk to you, and we'll get into ergodicity and other things. I should just tell you that Luca's got a master's in mechanical engineering from the Istituto Politecnico di Torino. And for those of you who don't know, Turin is in the northwest of Italy. It's the best part of Italy. I've fallen in love with the region. I don't know if you realize this, Luca, for all sorts of reasons that have got to do with food. But Luca also speaks about 8 languages, including Spanish, English, French, and obviously Italian. And I've got here Russian and German. We'll see how he does on Russian and German. And Luca's written a number of other books. The ergodicity book is just one of them. But so there's the introduction to Luca. And now I'm going to stop so that Luca can correct what's wrong and say hello to himself. Hello, Luca.
Hello, everyone, and thank you, Guy, for inviting me here, for inviting me at Value X. I'm so sorry I couldn't make it for a surgery, and I'm super excited to be here.
And I should tell you that after graduating from the Istituto Politecnico, or the Polytechnic of Turin, and I happened to notice that Luca had studied in Malaga, which is where my daughter studied for a while. Luca was a consultant at DuPont, which is a big American company. And that might have been Luca's last proper job, because for the last 7 years, you've been basically working for yourself. Perhaps you can just explain a little bit about about where you grew up, how you ended up studying mechanical engineering in Turin, and your path to becoming an independent, I think, independent academic, independent thinker.
Yes. Yeah, so I grew up in the Torino. It's a very industrial town. When I was a child, 1 in 3 people was working for the automotive sector, to give you an idea, including my father. And after I finished high school, like many people, I had no clear idea of what I wanted to do. And I decided to study automotive engineering, mostly because it was the path that could, in my opinion, open me to the broadest array of jobs afterwards. And so I did a bachelor in automotive engineering, then a master's in mechanical engineering. And during that, I discovered that I loved the part that has to do with automotive engineering, with production, and I didn't like the design part. And so I decided I didn't want to work as an engineer, for example, designing engines like many of my classmates, but instead I looked for a different job, and I found this excellent job in Frankfurt, Germany for DuPont. And there we were consulting manufacturing companies. And I really liked it because somehow different from some other consulting jobs. Almost everyone was very old. A lot of the consultants were retired people who had a career of hands-on experience working manufacturing, plant directors, and so on. Our engagements were very short. We would stay at the client for just a few days. And that allowed me to see so many different organizations. I had a lot of fun. And after a few years doing that, I felt like I've learned most of what there was to learn. And I decided to move back to my hometown, Torino, to keep doing part of the time the same job I was doing in DuPont, but for myself. And the rest of the time, I started doing independent research. And I focused on human behavior, published a few books on that and papers. And then, of course, also wrote the Ergodicity book and a few other projects.
And we're not going to have the time in an hour to get to all of Luca's thoughts, but I think that a thread that I see through the titles and what I've read is that you get super excited, and tell me if I'm wrong, or if you see it differently, when you discover there's kind of like an insight that is actually super powerful, super true, and I think that you know they're kind of intuitively correct, even if you can't prove them, but somehow the world does not see them, and that seems to me to be the kind of thing that you write about. So you wouldn't produce an engineering textbook and all the engineering that you know, but there are these things a bit like ergodicity, where it's like it's a truth that's sitting there that everyone seems to overlook. Did I get that? Is that anywhere in the ballpark of what interests you?
I think you're very correct. I'm interested in this phenomena that you can experience in the real world, and in particular those which we kind of feel the effect, but we didn't really explain the bottom-up mechanics that underlie it, or maybe we didn't build the language around it. And part of what I like doing is to understand really the micro that creates the macro, and then give people the language and the cause-effect relationships to talk about it.
And so maybe you can, maybe because the place where I've kind of entered your work most completely is through this ergodicity idea. Maybe perhaps you can, well, you do it however you like. I would tell the listener that there are great videos on Luca's website explaining this. And so now he gets to do it to me standing on one leg, but either explain the idea and how you got to it, or explain your journey to finding this idea and realizing that even though it's so basic, it's just not taught and most of us don't understand it.
Yeah, the trick is that giving a definition of ergodicity, it's very hard. It's much easier to talk about the effects that it has on the world. And so usually I will start with the same example that I bring in the book, which is skiing. And I begin the book with a small riddle, which is, let's take a skier who's very good and he has a 20% chance of winning each race, but he also takes a lot of risks and he has a 20% chance of breaking his leg in each race. And I ask the question, which is, how many races is he expected to win in a championship of 10 races? And the naive answer is 2 races, because we tend to think there are 10 races, he has a 20% chance of winning each, 20% times 10 makes 2 races. But if you do run the numbers, you discover that the real answer is much lower. It's 0.71. And the reason is because the skier has also 20% chance of breaking his leg in the first race. And if he does, he will miss future races, which means that he only has an 80% chance of participating to the second race, and therefore an even lower chance of winning it. And he has even fewer chances of participating to the third race because he can only do it if he didn't break his legs in the previous ones. And that causes the expected wins from the third race to be even lower. And if you run the numbers, you get to 0.71 wins, which is so much lower than the expected 2 races that we would arrive at if we do not realize that irreversible losses absorb future gains. So the problem with breaking your leg in a race is not just that you lose that race, but it's also that you forego the possibility to win any subsequent race.
And
we can see,
yeah, no, go ahead. Go ahead.
No, just wanted to say
I shouldn't have interrupted you. Go ahead.
No, I just wanted to say that we can see that in investing. If you make a bad investment and you lose, I don't know, $100,000, you don't just lose $100,000. You also lose all the future gains that $100,000 could have generated.
So when I take it to people who understand the idea of a geometric mean versus an arithmetic mean, they will say, well, that's obvious. and I think that, I don't think it's obvious. I think that, so if you take, and your book does a really, really good job of describing how what is ergodic from one perspective or is non-ergodic from another. So from one perspective, and the example I'm using these days is the general in the army with many divisions and battalions can look at the law of averages when he's losing soldiers. But if you happen to be the battalion that is there trying to take Bakhmut, that law of averages is not very pleasant to you. But even that doesn't cover it, because if you sit with the competitive skier in your example, the competitive skier is very, very focused on the 20% chance of winning the race. He's not focused, he or she is not focused on the 20% chance of injury. And in the circumstances of the individual race, what they're focused on is skiing as fast as they possibly can. And what people notice is the skier that skied as fast as they possibly could. And by the way, it's only a 20% chance in your example of getting injured. So most of the time they will do really well and they won't get injured 4 out of 5 times. And so there's this pressure on the individual in the actual race to actually behave suboptimally, if you like, but they don't perceive it as such. I don't know if you want to comment on that.
Yeah, exactly. This difference between the incentives in the long term that a skier might have to win the championship, but maybe they don't perceive it, and the instincts and the incentives in the short term, which is I'm just focused on this one race and I'm focused on winning. And this indeed is a very big problem because it happens to us all the time. We are focused on we have a goal, we have a milestone for the year, and we think that if we do everything we can to achieve it, and then we just keep chaining these, next year, next goal, next milestone, I just try to achieve it, and so on, we will actually get as high as we can. But what we see in life is that to get as high as you can in 10 years, it means to take something a bit suboptimal in each of those 10 years. Because 1 year, for example, you can work as hard as you can neglect your health a little bit, you can neglect your friends for 1 year, they can bear it, your body can bear it. But for 10 years, probably not. And so we always need to realize which is the time horizon that we really want to optimize for. One reason why I'm not using formulas in my book is because numbers, when used blindly, they can mislead. It's very easy to look at the best model or formula to achieve our objectives in 1 year and then extrapolate for 10 years. We make the hidden assumption that the best strategy to maximize returns in 1 year will naturally be the best strategy to maximize returns in 10 years. That's seldom the case.
Which it would be if the world was ergodic.
Exactly, would be if the world was ergodic. So just to give a background to the listeners, so what's ergodicity?
Yeah, good luck.
There are basically two concepts.
Please, everyone, Luca's going to do the best at explaining it. Don't lose us. Don't switch off. This is really important. Okay, go ahead, Luca.
No, I will be very simple. There are two models of the world. One in which you can extrapolate from time horizon. The average that you could compute in 1 year is also the average in 10 years. The best strategy that applies to 1 year is the best strategy that applies to 10 years. Back to the example of the skier, if the expected wins in one race is 0.2, the expected wins over 10 races will also be 0.2 times the number of races. If that is true, we can say that we are in an ergodic system, and we can use averages, we can use extrapolations, and so on. But if it's false, then we are in a non-ergodic system, and using averages might be misleading, and you definitely cannot extrapolate shorter time horizons to longer time horizons. And the question that I usually get is, Luca, what's ergodic and what's non-ergodic? And the answer is very simple. Nothing in the real world is ergodic. And therefore, you always should consider sources of irreversibility. You should always be very careful when you extrapolate over time horizons and so on.
And I just want to bring it, so many of my listeners will be have an interest in investing. I just want to take it directly to me in my life, and I'm in the middle of writing my annual letter. So I've survived 25 years as an investor. And I think that if you look at the number of funds that were around 25 years ago, last time I checked, it was less than 3% that are around today. And the reason why they're not around, there are all sorts of reasons why funds close. And I think that it's important to acknowledge that some funds close because they had extraordinary success on the upside, and the manager of the fund made so much money that he decided she decided they didn't want to do it anymore. So it's not like every fund that closed down failed. But this idea, Warren Buffett talks about, there are no called swings in investing, but there's this feeling of do something, you idiot. And if you're not doing something, then you're not investing properly. And I think that the vast majority of people investing feel this overwhelming pressure to take hidden risk. And that is like the skier, because when the skier wins the race, nobody comes and says, you did win the race, but you took hidden risk. You skied faster. You were close to injuring yourself because you just see a guy who succeeded. And that's part of this story that is, I find, really, really hard to explain. But then if you do it for long enough, it is an inevitability that risk of injury, or in my case, the risk of blowing up, is going to show up. And so I think that I instinctively was doing the right thing by taking far less risk than people expected me to take. But the world didn't see it. And the only way that you see it actually is in the fact that I've survived 25 years and have still very modestly exceeded the indices by a very, very modest amount. So yeah, I guess maybe I'm still curious. So we've explained it. And I hope that, and we could go into, I mean, I think actually in my review, I use the Kobe Bryant analogy. I don't know if you enjoyed that or like that. You're welcome to use that in future editions of your book if you like. But yeah, so I mean, that's another example, would you not say? Do you know the Kobe Bryant example?
Is it the one about the helicopter?
Yes, exactly.
Yes.
So yeah, go ahead.
It's the fact, for example, that using the helicopter is a very risky activity. How risky? Not risky enough so that taking the helicopter once when you really need it is a bad idea. Because some people, especially if they need to do some very fast travel, you could make the argument that never taking the helicopter actually introduces other kinds of risk. Like maybe you really miss that the deal that you have it. But the thing is that taking the helicopter does have some very small percentage, but non-negligible percentage of having an incident. And if you keep using the helicopter every day to do everything, even when you have the bad weather, there is a quite considerable chance that at some point you will be in a very bad accident.
Because it's cumulative.
Because it's cumulative. Exactly. So again, you have this tension between what's best if you do it once. Sometimes taking the helicopter once when you really need it could be actually the best strategy. But you cannot extrapolate over a lifetime, because then the cumulative risks, they will really, really, really start to accumulate.
So if I go into so Ole Peters has a great presentation to the Royal Society in which, so we're each on a life path, and you cannot recapture. I mean, another way of looking at that is that the skier who injures himself can't reset and cut himself into 20 different versions and send each version down a different life path, where some of the versions are versions that did not get injured. We're on a path which we cannot recapture. And often when we look at an average, we're looking at a situation where the only way you could get the average is to split yourself into many versions of yourself, where each version of yourself gets a bit of that outcome. And we live in a world of extremistan, where what we notice are the people who just got extraordinarily lucky. And I was just reading one of your supplemental chapters in a discussion of Elon Musk. And maybe that's probably fresh for you. Maybe you want to just describe what you said there, because I think that what is also challenging for those of us who want to apply the insights to ourselves is that we're going to constantly get yanked away from them. It's very, very hard to want to do that, because you keep getting examples like Elon Musk. Maybe you can describe or summarize that chapter for the listener.
Yeah, so I wrote the chapter because Nassim Taleb a few months ago wrote a tweet in which, paraphrasing, he said that much of Elon Musk's fortune was due to luck. And a lot of people had a very bad reaction to this, because they say, no, Elon Musk is very talented. These two affirmations are not at odds. Probably Elon Musk is extremely talented, and yet most of his wealth is due to luck. How do we know that? Imagine 10 parallel worlds in which Elon Musk is extremely talented and extremely determined in all of these worlds. And then you want to check how wealthy he is in 2023 in all of these worlds. And probably in a lot of these worlds, Elon Musk will be very rich, probably at least a millionaire. In a lot of these universes, he will be a billionaire. But now, I don't know how many billions he has. Let's say he has 500 billions. I'm taking a random number. In some of the other universes, he will have 20 billions, 5 billions, 1 billion. Maybe in one universe, he will even have lost his fortune because he bet very hard. He went all in on quite a few bets. So if you look at the average wealth in all these other universes, it's still very, very rich. Probably his average wealth is still a billionaire, but maybe the average is 2 billions. And now he has 500 billions, which means that 498 billions were due to luck.
So I'll take you to another place, which I think is, for people of my ilk, is important, actually, is that, so, I had a conversation with a former politics professor of mine, and he basically explained to me, we were talking about British politics, that every individual that we see as prime minister or member of the British cabinet is one of those types of personalities. So they're both skillful and capable, and they also take an enormous amount of risks, because it's the only people who are willing to increase the variance of outcomes in their lives, combined with the talent that gets them, that gets the right end of the tail over the threshold to get to something else. And there's an interesting example right now in British politics, this guy, Matt Hancock, who takes an enormous amount of risk. And so he was one of the youngest ministers of health, for example, that the United Kingdom ever had. But now it's unfolding in a negative way for him, because he's kind of imploding. It's just the nature of his personality. But so what I think that part of what these ergodicity discussions, reading your book, allows me to see is that, first of all, it allows me to be very happy with an outcome that is very good, but is not at the extreme end, because in order to grab the extreme end of the tail on the upside, I would have had to also make myself comfortable with the extreme end on the downside. And actually, I think that there's a better strategy in life, which is just to maximize the worst outcome, maximin, because actually that's what we really care about, and work on that rather than working on maximizing the upside. I don't know if you can talk to that in any way.
Exactly. I completely 100% agree. The principle here is that a lot of time we think that if we maximize our best possible outcome, we also maximize our average outcome. But that is not what happens in the real world. In the real world, it's the opposite. The more you try to maximize your best case scenario, the more you decrease your average scenario. And that is the key. So as you say, what's best instead is not to maximize the best scenario, but to maximize the worst scenario. And this is the shift that we should all do, from looking at the best possible outcome or the average outcome, instead looking at the distribution of outcomes.
Yeah.
And we want to have strategies that we are happy with the full distribution of outcomes. I make an example, a conversation that I have over and over with people in tech. I talk with people which have been working for a few years in a startup, and they are very wealthy, but their wealth is mostly concentrated in stock options in their startup. And some of them, they don't want to diversify. And the reason they don't want to diversify is because they say, I really believe in my startup. I have a lot of reasons to believe that this startup might make me extremely wealthy. And there is nothing that I can diversify with that can approach these expected returns, which is true. But if he keeps his whole wealth inside stock options in the startup, we might have a distribution of scenarios where maybe 70% chance of being a billionaire, let's say, and 30% chance of ending up with almost nothing. Would it be better instead for him to have a 100% chance of being at least a multimillionaire by diversifying? And then, of course, in the very good scenarios in which his company becomes the next Google, he will still be very rich, maybe not a billionaire, but at the very least, he has a guaranteed chance of being a millionaire.
And I'll just add a kind of an extra wrinkle to that, is that I think that something that I keep trying to remind people who are observing other investors' behavior is that often we don't know whether or not they've protected their downside. So it is not required to be revealed in public documents whether they own their house without a mortgage, or whether they're heavily indebted in their private lives, or other forms of debt, which might be, for example, going through a divorce, which requires an enormous amount of payments to other people. And that can have a huge impact on behavior. And again, it just seems to me that regularly one of the things that the stock market does, or that life does, is it drives you to not consider those sort of like variance reducing exercises. You ignore it. And when I try to talk to smart people about this kind of stuff, their eyes glaze over, Luca. It's really fascinating, because on the one hand, people who are not mathematically oriented, their eyes glaze over anyway. And then the people, I've not yet met Ole in person, but the people who are mathematically oriented, many of them say, oh, this is trivial. So tell me something I don't know. This is obvious. And I think there's an enormous amount of subtlety in this that Ole is looking to explore, but somehow, in a certain way, it's a source of great opportunity, perhaps, for those of us who do understand it. I don't know. Have you experienced the same thing?
Yes, and let me tell you a bit more about that, because I just 1 month ago I just presented at the Ergodicity Economics Conference, for example, and then there was a discussion after my presentation, and some of the people in the room, which were basically everyone was a mathematician, they asked me how I would quantify the phenomena I was talking about. And my reply was that I would very much not quantify them, because whenever you start putting a formula, you're making assumptions about the variables. And very often we plug in inside a formula, but we plug in the average for the variable. And we lose a lot of information about the distribution of that. Maybe what matters is not the average, but it's the distribution of that variable. Or maybe we don't even know what the real distribution is, because we haven't had enough time to see all the possible values or anything like that. So a lot of times, whenever you use a formula or in a model, you have a lot of blind spots. You're introducing blind spots.
Yeah.
So I'm not saying that you shouldn't use mathematics because they're very useful. I'm saying that you should never rely on them. You should always have two things, one which is the mathematics and one which is just thinking about the concepts, thinking what might be missing, what are the effects which maybe I cannot quantify but are still very real. And then you just work with both, trying to make sure that the mathematics cover the blind spots in my thinking, and my thinking covers the blind spot in my mathematics.
It's interesting, actually. I didn't think that, you think of mathematics as a powerful tool, but you don't think of mathematics itself as creating blind spots. But I think that I can address it. I can make the same point in a slightly different way. So I've received advanced chapters of a book by somebody who's, again, a professor of mine. All my relationships, because I'm not an academic, are with people who used to teach me. This is a guy called Amar Bide, who was a professor at Harvard Business School at the time that I got to know him. And he's writing a book about something called Knightian uncertainty. And for everyone who's interested, I've never brought these up to Luca before. So when he raises his eyebrows, he's like, oh, is this something new? Or maybe Luca's heard of them. And then I'm going to bring another something else up before I describe it. There's an amazing article by a professor of economics at the Kennedy School at Harvard called Investing in the Unknowable, the Uncertain and the Unknowable. And the idea here is that there are things where we know the distribution of outcomes, or we can have a very, very good guess on the distribution of outcomes. And actually, that is very, very knowable. Once we've got the probability distribution of the outcomes, we're very knowledgeable about it. And so there's the concept there is that that's risk, and risk can be defined in all sorts of ways as a variance or another probability distribution. But then we have events like a California earthquake, and we don't know when the next earthquake will happen. Or, as Nassim Taleb talks about it, black swans. And we've only got one. Do we get a black swan once every 100 years, once every 1,000 years? Is that the only black swan we'll ever see? We don't have a distribution. And in the case of Amar Bide, he talks about sort of uncertainty in new business ventures, and that entrepreneurs tend to start new businesses where there is no knowledge about whether it will succeed or fail. And I guess my question to you is, that's really what you're talking about. It's sort of like the minute you do a probability distribution, you're assuming something that you know what the probability distribution is. Maybe you don't, actually.
Exactly. And let me make an example with mechanics. Mechanics tends to be something that we think that we know the probability distributions for, because we have all the tables to know, for example, the probability distribution that a rod of this metal has what's the actual strength that it can.
And it's the physical world. We can test and test and test.
Exactly. And if I talk with a theoretical engineer and so on, they will say, yes, we know the probability distribution. Now, instead, let me talk with someone who does risk management in mega projects, in constructions projects, which is also something that I advise for. And they will, and let's ask them, what are the possibilities, what are the causes for which the metal rod might break? And they will tell you something like, oh, maybe the producer didn't produce the metal rod as per the specifications. Or maybe the layman didn't properly put the metal rod in the right place in the right way. Or maybe they didn't fix the roof above the metal rod and the corrosion from rain causes them, all these kind of things. These are risks that go into the probability distribution of the strength of the metal rod. But usually we do not consider them because we think in the little box of metallurgic engineering, for example. So so to go back to what you said about black swans, one process that I use to de-risk projects is I look at gray swans. So black swans are catastrophic events which we couldn't predict. Gray swans are catastrophic events which we could actually predict because there's been a lot of them like that in the past. So what I do usually is that I create a Nishikawa diagram of failure modes. Let me explain. It's a very simple diagram where you put the thing that you're trying to de-risk in the middle, and then you try almost to do like a mind map of what are the possible failures that can come out of it. And let's go back to construction project. One is, for example, it breaks because the project was wrong. Another possibility, it breaks because the materials are not on spec. And then you develop into branches. What are the possibilities? What are the causes that might cause the project to go wrong? Oh, we hired inexperienced people. There were too much political pressures. We were rushing, and so on. And what happens is that you get this diagram which looks like the skeleton of a fish, or like the branches of a tree, which every leaf becomes a gray swan. A possible failure that you could totally predict, and very often a lot of those failures are not in traditional risk models.
Right.
And then, of course, you can take the considerations. You can say, this leaf, we want to address it because it doesn't cost much to manage it. This leaf costs a lot to manage, so we will insure against it. And this leaf, maybe it costs so much to insure it that it's a risk that we take in the business. But at least you have a very good overview of what could go wrong.
Yeah, it sounds to me that you're talking about inversion. So you're asking the question, let's assume the project went wrong. What are all the possible reasons why it could have gone wrong? And then to try and understand that. Now, before I want to kind of ask you about some of the other things that you've done. You give examples in the book, later on in the book, of ways to, once you've identified that you're in an ergodic world, once you've identified that path dependence is really, really important, there are ways of mitigating. And to the listener, I think that what I want to urge you to consider is that this is a new and wonderful world for me that I haven't fully got my brain around. And I think that what I'm hoping that you will hear, you will be induced to think about, is that as you start thinking about this, you'll start realizing that this phenomenon is around us all over the place. And once you start noticing it, then you can start doing something about it. And just to bring this back to investing, I feel a lot better about not having the world's greatest returns, because in order to do that, I would have been risking blowing up. And I prefer not to have blown up. And so I have to see those two things together. But and forgive me because I don't have them in front of me, but do you have examples of how one can mitigate the effects of ergodicity, if you like? You have some practical examples later in your book. I don't know if you can recall them easily.
Yeah, so one example is diversifying. So for those of you who know what's the Kelly criterion in betting, Kelly criterion is basically a way to say, I will use diversification to make a process ergodic within some measure. If you are not familiar with the term, the idea is if there is an investment that has a risk and you go all in and you do it for a long time, you will blow up. But if you make it one bet, one of many bets of yours, and you think like, yes, there is a risk that this will blow up, but I'm okay with one or few of my investments to blow up if the returns are high enough over my portfolio. That's a possibility, and that's what venture capitalists are doing, basically. And that's why, for example, venture capitalists sometimes they push founders to take excessive risks, because they don't care about the distribution of outcomes for the founder. They care about the distribution of outcomes of their portfolio, which are completely two different things.
Evgeny Prigozhin doesn't mind if one or two convicts get killed on the front line. And but I would tell you that even in that, well, two things. One is that the Kelly criterion implies that you know the future probability distribution, which you don't. So you can always get, you know, if you're going to try and apply the Kelly criterion, you want to be conservative about how you apply it. And there's another element, which is that you're not looking at the impact. And this is, Luca, your idea that the model fails to capture the complexities of reality. And so if I try to apply the Kelly criterion and I take small bets, small enough bets that have a good probability or good enough probability of working out, given the size of the bets, so what happens when I do my first small bet and it blows up? And actually, what I need to do is do 10 of them, but I lose. So a bit like the skier, but in this case, it's not my portfolio that blows up and it's not my leg that's broken. It's that I lose the will because it's so painful. The downside is so painful that I'm not capable of doing bets 2 through 10, which will get me those results. So I've actually come to the conclusion that even applying the Kelly formula in my portfolio, and I'll take you into something that's sort of, so I have this Indian friend, Monish Pabrai, who is capable of doing that. So he will take high probability or you know, very, very uncertain. He's got a book called The Dando Investor. He'll take an uncertain situation where if he does enough of them, he's going to do very, very well. But in any individual situation, it might blow up. And the issue that I have in trying to do that is that I can't continue because I get too involved. I get too down on myself when I have a blow up, if you like. So I am wary of that. But yeah, the Kelly criterion was originally used in casino betting, I believe. Well, it started off as an information formula, talking about how much information gets through a wire. And in a casino situation, that's an example where you have, it's all risk and none of it's uncertainty. But there's another example, actually, the world, we have these probability distributions and we therefore assume that it's risk, but actually every now and then the probability distribution blows up and it's uncertainty. So it's a whole world of opportunity to explore and understand. I want to dive into a few other topics just for fun. So one is, I want to hear about your experiences with Rome research, linked thought, Obsidian. I've downloaded a couple of your books on Rome. I have a relationship with Rome, but I'm not as excited about Rome as I was, but I should hear you first talk about it.
Yeah, I kind of share the same experience. So I've published basically the first Rome book ever. Rome is this application for taking connected notes. You can think about it as creating your own Wikipedia where pages are all connected with each other. And to be honest, right now I'm using it much less than I did it before. I use it for topics in which I'm taking small notes and the connection really matters. For example, for medical notes about myself, I take them because I need to see the connections between, for example, like different health problems that I had and so on. I use it sometimes for some type of client projects. I'm not really using it for notes, for highlights that I take from books anymore, because I think that for those things, the connection aspect doesn't really matter to marks. And so right now I transition to use this tool for book highlights, which is called the Readwise, which basically syncs with the highlights that you make on Kindle, the bookmarks you get on Twitter, and then it shows them to you 10 per day, every day, and you can like adjust the frequency. And I like this spaced repetition. Yeah, so that's my experience.
Have you read anything or done anything with the Zettelkasten method, or this Professor Lohmann, Niklas Lohmann? Have you come across that?
I've come across the Zettelkasten method. I tried to use it not to great personal success. But that I think depends a lot also on how you think. There are some people who think some way, or even just your schedule. Like for me, the process in which I think a lot is when I have some free time, I go to a coffee shop, I grab a cappuccino, then I take some sheets of paper and I start thinking about some phenomenon. And for me, in that case, that method doesn't really give great benefits. But
Yeah.
I think it really goes on what's your schedule, how you use it, what's for.
And I just give you my experience. So I'm a so I guess I got super excited with Rome and was using it as my primary note taker for a while. And I think that in a certain sense, the linking is almost too easy. And so you can write really short notes. But I've now, so I would argue that I have 4 parallel systems working, and I don't know how to get away from it, because some are completely electronically based and some are completely paper based. So I always have, I think that somebody called this a commonplace book. I always have one of these moleskins around, and I have multiple moleskins around. And then I just have paper, and I have behind me, you can see here, and I see, where's my handy up there? You can see the paper, and I move it around and I sort it, and the paper itself becomes a physical opportunity for spaced repetition, because you can either throw it away if you think you know it, or and then I've played with the actual physical cards, again, not to great effect yet. But I think that it may be that over time, I've found the kind of the sorting through the cards one after the other and putting them into different orders. And there's something about the fact that the cards slows you down. It forces you to think and to do things in a certain way. And I guess none of these. And then the last thing that I use is Evernote. And so and then actually, Luca, when I write for example, my annual letter, or when I wrote my book, I use a piece of software which I find really helpful called Scrivener. I don't know if
yes.
I love Scrivener. But ultimately, the links that we really want to create are in our minds. And the spaced repetition, I mean, each mind needs to create its own spaced repetition. What is obvious for you may not be obvious for me, and vice versa. So there are other aspects of, you've published a number of books that I haven't dived into. One of them is about autism. One of them is about control. Can you just sort of like maybe summarize some of the other books that you've written, why you wrote them, actually, why you dove into those particular topics?
Yeah, so the reason, for example, I wrote this book, The Control Heuristic, which is about human behavior. And that started from a realization I made that we make so much effort towards getting better decision making. But most of us, including for sure myself, I don't have a decision making problem. I have an action taking problem. I think I take great decisions, but then the problem is that I don't follow up on them. Then I started asking myself, why? And turns out that in our brain, we have different parts of our brains that do different things. And the part that does decision making is completely different from the parts that decide action taking. And this has very profound implications from, for example, sales. You can convince someone that the best decision is to do something, but if you only convince the part of their brain that makes decisions and not the part of their brain that takes actions, they will not take action on that. The same applies with managing people and, of course, with managing yourself. And so the question is, how do those parts work? And now I'm making a very big simplification, but the part that takes decisions is the part that is able to think about facts. It's the part which is able to make mental models. It's the part which is able to think like, to build a scenario in your mind, maybe look at the future, and then decide whether the future is good. The part instead that takes action doesn't do any of this. The only thing it does is it checks against experience, past experience. And in particular, it checks about the past emotional associations that we have with the decisions that we take. Give an example. I decided that the very good thing for me to do this afternoon after this podcast would be to go running because it would be good for my health. That's something that a decision that I take by thinking what would happen if I run, what happens if I don't run, and so on. But then what happens is that the podcast ends, and then I will just notice that I will not go put my running shoes, and I will not go outside my door. Why? Because the other part of my brain gets the suggestion that I should go running, and then it checks what are the emotional associations with it. And if the emotional associations are, oh, it will be cold, I will be sweaty, it's tiring, then I will not take that action. And if instead the positive the emotional associations are, I will feel great, my wife will tell me that I look great, whatnot, then I will go running. So to take action, we need to have two things, actually three things. We need to have a rational idea for which is good, or we need to be reminded of a certain suggestion. For example, we are at the supermarket, we see the chocolate, that immediately creates the suggestion we should buy, we should consider buying the chocolate. So we have these considerations. And then the considerations, they go to the other part of the brain, which is in charge of action taking. And the only thing it checks is, of all the considerations that came to me, I will take the one with the highest expected emotional outcome associated to it.
Right.
Yeah,
and it's a very powerful idea, extremely, extremely powerful. And I haven't heard it laid out that way. And so that is your book called The Control Heuristic.
Exactly.
Explaining irrational behavior and behavioral change. And I want to give one example of how powerful or profound it is that I don't know how successful I've been with our three children, but the key moment that I want to be with my children is when they've just failed at something. And I want to grab them and not say, oh, that's too bad, you failed, and say, congratulations, you failed. That is awesome. Let's reward the fact that you failed. Let's feel really good about this. And they're like, sort of, what are you doing? I kind of try and explain to them, life, you're successful in life will not depend on, it won't depend on how many times you succeed. It will depend on how many times you fail and are willing to step up for another situation where you might fail. And so you need to kind of feel good about every failure, because and have lots of them, hopefully not falling out of a helicopter, but I mean, some of it's a really fascinating and powerful idea. And when it comes to working out, I guess part of the answer is to focus not on how hard a workout you have, but to make sure you have a really good massage after every workout and create that association in your mind that workouts give you, a nice outcome of some kind or other in the short term. I guess it's going to come into the podcast. I had this amazing experience last summer where I found myself a coach, a very experienced coach who coaches a women's cycling team. I'll call out his name. His name is Tom Hellerman. He's an amazing guy from Tasmania in Australia. And he comes running with me and he tells me, you're running too fast. And he says, you're pushing yourself too hard. And he says you actually only want to have a workout in which you push yourself beyond your capacities, maybe once every 5 workouts. And it's the same idea that the majority of the workouts are actually not about training your body. It's just creating being a person who enjoys working out, because that's what's going to keep you going in a certain way. Now, have you had any success in applying those to consulting clients to help them design different environments? Because you see, Luca's nodding for those of you who are just listening on a podcast, but just another example before you come back to me is that I think that one of the insights that I've had is that, so I don't, one of the ways to counter that, it doesn't mean that I have to fix myself. Maybe as part of a team, there'll be other members of the team who can help me create those positive associations. But you were going to come back to me. Go ahead, Luca.
No, like there are so many situations. I make one example. Sometimes a client comes to me and says, Luca, my team doesn't come up with new ideas. And then I ask them, what happened the last time that they did come up with one idea? And unless the answer is something like, I did something that made them feel good, that's the reason why they're not coming up with new ideas. Yeah. So one possibility is they came up with the idea and then you shut the idea down. And if you did it in a way that made them feel bad, they will not come up with new ideas. Another possibility is they came with an idea and you said, I will consider it. And then maybe you consider it and maybe you enact it 2 months later. But meanwhile, in these 2 months, they will have had the feeling that their idea was wasted effort and they will just not come up with new ideas. And certainly, like so much of managing people, it's when they do something good, are you doing something that makes them feel good? And when they do something bad, are you making them feel something, at least that you noticed that they did something bad?
Yeah. I'm reminded of a book called Whale Done, in which the author basically asks the reader, how do you convince killer whales to do these extraordinary things? And it's got to do with effectively what I mean, if you have a pet, is this a big part of this is simply positive reinforcement. Another thought that comes up for me, which I was trying to share with my wife the other day as she was editing my ideas, is that, I've shared this with my children, there's idea generation, there's idea editing. And those are 2 very, very different things that we both should get as good as we can on, but we should never confuse the one for the other. In the one, we're completely non-judgmental of ourselves and non-judgmental of what goes up on the board. And on the other, now that we have a huge number of ideas down there, we're trying to whittle them down. But too many people edit before they've actually generated any ideas, if you like. I don't know if you want to talk about this. I was accused by a family member of being autistic, which I don't believe is true, but it may be high functioning autism. But can you explain what the idea behind that book is?
Yes. So the book is called The World Through a Magnifying Glass, and I'm trying to explain autistic perception. So first thing, I need to make a very big disclaimer, which is autism is a spectrum of conditions which have different causes, different manifestations, and I cannot cover them all in the book. And in the book, I'm particularly covering some of the most common forms of very mild autism. So not the people who have autism that doesn't really allow them to function very well, but mostly a lot of people which are very numerous, which to some spectrum, they tend to have a slightly different perception or sometimes some very slightly mannerism, or sometimes a lot of time growing up, they manage to pair to that perception another type of perception or to cover some of the mannerism and so on. And basically one of the, like the metaphor that I'm using in the book is that of a magnifying glass. And imagine that you're reading a book with a magnifying glass. If the magnifying glass is very weak, through the glass, you can read the full sentence. So you grasp all the concept, all the context. So you have a very good idea of the meaning of the sentence, but you do not see the letters very well. So you cannot see the small details. And that's how neurotypicals see the world. Then you can have a strong magnifying glass where you can only see half of the sentence, which means you will see details better, but you will not see the full context of the sentence. And that's what a lot of people with mild autism, they have. And you see that in situations where context is very important, for example, social interactions. When we talk, the tone of voice changes the meaning of the sentence. So if you are not good at integrating between sensory channels, which is sometimes that's something that some autistic people do, sometimes you will misunderstand the meaning of the sentence. And
that's so fascinating.
And that might cause you, for example, to stay shut, to keep your mouth shut, because you have you're ambiguous about what the other person said, so maybe you don't react, or maybe you go socializing a bit less, and that's one of the ways that autism manifests.
That's so fascinating. Yeah, go ahead.
Then let's go to the third. By the way, why are autistic people like sometimes successful at maths? That's because in maths and sciences, you only care about the details and not about the context. And therefore, having a magnifying glass provides you with an advantage.
Yeah.
Now, let's go to the tail end of the autistic spectrum. You have a magnifying glass which is so big that you can only see a word at a time. The word you see it very big, so you can see all the small details in the letters. On the other hand, you don't have any context. If you can only see the world one word at a time, you cannot make sense of it. And if you cannot make sense of it, you also cannot learn even to speak. You also cannot make sense of a lot of things. Imagine if I showed you a transcript of a conversation, one word at a time, but not as in subtitles, where you see the words one after the other and you can keep the context in your mind. But imagine that you had the memory of a goldfish and you can really only see one word at a time, and that's the context you have. You will not be able to understand the conversation. And because you don't understand, you cannot learn. Yeah. And if you cannot learn, you will have a lot of the manifestations of severely autism in some way. Now, again, this is not description of all the cases of autism, because there are different conditions, different causes, and so on. But it describes some of the people that we can put under the umbrella of autism. And for those people and the families and the friends that have people in this, I tried to explain so that they can communicate better and they can teach a bit better and they can make understanding easier.
What a fascinating area to go into. I have, I guess, two last areas which could take an enormous amount of time, but I guess we'll try and bring this in the next 10 or 15 minutes or so. The one is you work for yourself. You've chosen an independent life. Curious to understand that journey. Have you yearned to be an academic, maybe, and be a professor at a university, and maybe you can describe how you got to that life? I mean, you seem to me to be a pretty happy guy. And then the last area I'm going to ask you about is, you don't realize this about me, but I fell in love with the northwest of Italy for all sorts of reasons, and I want to ask you about your region. But how did you construct your life, actually?
Yeah, so one of the reasons why I became independent, so there are two reasons. One is that I like doing things alone, like just for my personal inclination. The other reason is that I had a life which was marked by a lot of personal losses. My father died when I was young. Even things such as a lot of other people in the family, even myself, I got diagnosed with cancer 2 years ago. Now, thankfully, it seems to be cured, got discovered very early, but still you're always living a bit with this
fear,
like uncertainty about your time horizons.
Congratulations on surviving.
Yeah, so my rule for life is I don't try to optimize it for any specific time horizons, but I think like, what's the choice which makes me happy, whether I live until I'm 90 years old, or if I die at 60, or if I die next month. I try to consider that all three scenarios are possible, and I try to get to take decisions which I will be relatively happy with in any of these three scenarios. And so one of the things I wanted to do was to have enough time to do some of the activities I liked. One, which is to spend time with my family. So I like that being independent, I can at any time, like then I'm not taking the option very often, but I like to have the possibility that if one day I get very bad news, I can immediately stop everything that I'm doing and spend the next year with completely with my family. Or if it happens something to my parents, I can do to my mother and to her and her companion. I can do the same thing. So I wanted to keep that option open. And then the other thing is I really like doing things alone, and I didn't want to wait to be able to do that part of my life, because I only do things alone maybe 30 per 40, 50 per 40 50% of my life. The other half I do like a lot of consulting work and so on,
Right.
but still I want to have the.
Can you describe, so if somebody hears this and they decide they want to engage with you, I mean, I guess everyone, Luca, and it'll be in the show notes, he's got a website and you can find his books and they're well worth reading and they're easy to read. He's an engineer, but he writes for non-engineers. But if somebody maybe wants to, I mean, I'm curious to hear about your consulting clients to the extent that you can share, and maybe somebody listening to this becomes one of your consulting clients.
Yeah,
What kind?
yeah, I do basically three types of consulting work. One, it's I help organizations with people management problems, any kind, like you want to increase your revenue by managing your teams better, or maybe you want to introduce some kind of organizational change. I help with that. And the way I help is not much like I do grandiose things like big surveys, great plans. But basically, I teach you the 2, 3, 5 things which you really need to nail at the level of people management and communicating change. There are 5 things, depending on the situation, that you really need to do right, that are the right things, and you need to do them right. And I train the key people in your organization to do that. It doesn't take much. Sometimes I do it like with each of the key people, 3 calls, 1 hour each, and I make sure that you will nail those critical things. That's one thing I do. The other thing I do is I do risk management consulting, which basically is I help you understanding the risks that that will have that you might have. People risk, some kind of organizational risk. I don't really do much on the strategic side, but I do a lot of other things. And again, usually it's something very quick, uh, because I'm basically teaching you, I'm telling you some of the risks which I see all the time and you probably are not aware of. And mostly I try to teach you to do that yourself. And the third thing is I coach some executives on how to better manage their teams. Yeah.
And do they come in through your books? Do they come in through just like through the website, or?
It's mostly books and word of mouth.
Oh,
Yes.
yeah, or word of podcast maybe. So
Yeah.
last set of questions. So I've been to Turin 2 or 3 times, and I discovered that also in your region there's a town called Alba, which is the capital of white truffle, which anybody who lives in this part of Europe discovers that in the autumn time it's the most incredible taste, and we all go after it. And then also Luca lives in close to the region where Nutella, which everybody's heard of, but we have a friend who has a factory where he makes his own nutty chocolate sauce, which is way better than Nutella. So Nutella is kind of like the commercial version, but if you live in Turin, so and then lastly, it's not far away from a famous wine region called Barolo, which is an incredible set of wines. And then over and above that, Italy is Turin is the center of something called the Risorgimento, as kind of like a reawakening of Italian national identity, even though it's in the northwest of Italy. It's the part of Italy that feels the most to me like Switzerland. People are simple, straightforward, good values. Last thing is that it's the headquarters of Exor, which I am an investor in, and I'm a huge fan of John Elkann. So maybe you can sort of like enlighten the listeners and me on the history of Turin and its relationship to Italy, the Risorgimento, also the food, why the region is so rich in food, and lastly, if you can answer a three-part question, why it seems that so much of Italian culture is in the northeast, not in the northwest. Actually, I made a mistake. Somewhere I called Turin in the northeast. It's not. Turin is in the northwest of Italy. So I don't know if you can address those three things.
Yeah, so I will start with food, and just fun fact, Nutella, like Ferrero, which is the company that produces Nutella, uses 1 out of 4 hazelnuts produced in the world. And yeah, we have a lot of food. We are the second, like Italy, and particularly Piedmont, is the second producer worldwide of kiwi, ahead of New Zealand. And that's because it turns out that some entrepreneurs in the 80s discovered that kiwis use the same infrastructure as wine, like those kind of perches that the wine can go on. And yeah, we have a lot of good foods. If you're visiting, that's a really good place, and the wine is amazing. Then for the history of Torino, so Turin used to be a Roman town. Then it wasn't much important in medieval times. And then what happens is that the Savoy, which is a king, a minor king from France, got displaced by the major king of France, the one in Paris. And he said, like, I won't fight. I will move to the northwest of Italy. And they settled their capital in Torino. And that's why Piedmont is, it's one of the reasons why Piedmont is also like, contains a lot of French influence. And then, very interesting, in the second half of the 19th century, there's been this movement to reunify Italy. And we had a very smart prime minister, Camillo Benso of Cavour, that did a lot of good things for the economy, and then managed very smartly to reconquest Italy. And he didn't do it really by waging wars. He mostly did it by letting other people waging wars. Now I'm making a lot of simplifications, but he took advantage of the fact that France was fighting Austria, and he had them fight together. He had them give territory to him to create a buffer and a lot of things. And then they sent a military expedition to Sicily and to come back up all the way to Italy. And basically, they didn't fight much. They mostly said, Italy is unified, by the way. And people were like, yay. Now I'm simplifying a lot, of course. And it wasn't that easy, and it wasn't that like everyone was agreeing, but that's just different from how a lot of other unifications happen. And then Turin became the first capital, and then they moved it to Florence and then to Rome. Yeah.
To Florence and then to Rome. I didn't realize that. They bypassed Milan.
Yes. I think that's because Milan has been Austro-Hungarian for a lot of time. Right. And so they didn't want, I suppose, that's my supposition, like to risk that then influence is gained back, or you don't want to put the capital next to the border, or these kind of things, I suppose.
So last question for you, and then you have to go for your run, is if you had to live somewhere other than Turin inside Italy, where would it be?
Oh, that's a great question. I've never really thought about it, because I don't know. I just love being here and next to my family. I think that it would probably be near Florence. I
Right.
like the area very much. I like the people. Yeah.
Florence is a very special place for those listeners who are interested. Well, I'll give my commentary, and then if you had to live anywhere outside of Italy and not Turin, where would you pick?
Mm, well, two places that I tend to like very much. One is Spain and one is Singapore. My wife is also Singaporean, so I have family there. I go there often, and yeah.
So it's just always fun. As somebody, for me, I've been a nomad, and I more recently, well, 14 years ago, I moved to Zurich, and I joke with my friends. So the only one of the downsides of Zurich, there are many upsides, is that there's no good cheap ethnic food. So you get sort of German sausages and sort of like thick slices of meat, and but what you do get is you get very good Italian food. There are plenty of Italians in Zurich, and so you get very good Italian food. And I sometimes joke with my friends and say that the one thing that I learned about Zurich is that I love Italy. And, Zurich is on the north side of the Alps, and all of Italy is on the south side of the Alps. So it's kind of a warmer place. And northern Italy is just such a wonderful place because you get a combination of Latin culture, but it's still mountain people, and it's people who are reliable and who make things that work and all of those good things. It's just a really, really rich area. But and uh, Florence is a very particular place. My experience of Florence is that Florentines don't think of themselves as Italian. They think of themselves as Florentine, and Italy is just part of the rest of the world. It's just you can live in Florence. You'd have to be there for 2 or 3 generations before they start thinking of you as also being Florentine. But in any case, Luca, thank you so much for taking the time to meet me in a podcast and to talk about some of your ideas. I'm looking forward very much to seeing what books you write next and to reading the books that you've already written.
Thank you so much for inviting me. It's really been great, and I hope I will meet you in person one day.
At ValueX or at the Ergodicity Economics Conference or elsewhere. So,
Yeah.
thank you.
Thank you.